All right, traders, tomorrow's going to be the last trading day of the week. With that being said, we are setting up for an amazing trading opportunity. I'm going to be sharing with you the details that I have on that in the beginning of this video. Then towards the end, we're going to be recapping the day and the overall analysis. I ended up having another green day going flawless for the week so far. Let's get straight into it. So in terms of the SPY, we are now sitting at the high end of the channel. If you watched yesterday's video, you are well aware I was not interested in trading at the lower end of the channel, especially for puts. I was just going to sit on the sidelines and I was going to try puts at 428.50. With that being said, I'll be recapping my green day later towards this video, but what I need you to understand is we are towards the top end of the channel. As you can see, SPY has been having very nice bull traps this week towards this 429.60 level. And this is a level that we called out way in advance before it hit. We were explaining we were interested in doing puts once SPY closes this gap at 426.70. There's a little gap to fill here. That's when it could start to have a reversal, and it has been reversing and crashing from that level multiple times. So what we're going to be looking at heading into the market open tomorrow is very, very simple. The previous closing price. This is going to be our overall key level heading into tomorrow, the closing price of Thursday, 429.13. So if we see the SPY gap down and it goes back up and 429.13 reacts as a resistance, we're going to be looking to hit puts. If we see SPY gap up, it opens up higher tomorrow, then we're just going to sit on the sidelines. And what we're going to do is we're going to keep an eye on 429.70. If we do it, very, very tight stop. But the main thing, if we do gap up, for this to go bearish, it needs to go under 429.13. If it goes under 429.13 and reacts as a resistance, then that'd be great confirmation for puts. So if you see it drop, pump back up, reacts as a resistance, forms lower highs. Once it spikes, it rejects 429.13, whether we gap up or gap down. That's going to be a great opportunity for puts. Now, if I do end up doing puts at 429.70 and I get stopped out, the next level where I will do puts is 431.70. I will try puts at 431.70. So say it gaps up, we go to 431.70. What I'll mainly be looking for is I'll be looking for 432 puts to go out of the money, and then I'll look to buy them out of the money, and then I sell back in the money. So if SPY goes above 432, I buy the puts, and then I sell those puts back when they drop in the money for a quick scalp. And then from there, what I would do is I would either wait for the 429 to crack, wait for the 429.70 react bearish, or I would just target a higher level. There is a higher level if this were to somehow go super bullish that I would target from there, and that would be this level right here. It is this 435 level. This is a key level right here, this 435.70 to 436 zone. That is a level that I'm very interested in. I'm just going to be watching. But look, man, my main true interest heading into tomorrow are these two levels. 429 and 431.70. Those are my true main levels for tomorrow. The middle level, I'll keep an eye on it, is 429.70. So just keep in mind, 431.70, 429, that's our game plan. At these levels, respectfully, I have no interest in calls. So in terms of calls, if it's reacting bullish, if it's a trend bullish day, then I will mainly just be looking to sit on the sidelines and unless we get some sort of crazy overreaction. Like if SPY were to break out above a key level and then it had a massive breakout and then it dropped back down to the previous resistance, I would look to dip buy calls. But essentially, my plan is very, very simple. I'm just going to be looking to targeting puts at those key levels, and I will be using strong bearish confirmations with very, very tight stop losses. In terms of my style of trading when it comes to making these videos, I'm not interested in buying calls at the potential triple top of the high end of the channel, right? Now, in terms of market hours, if the trend's bullish and we see a crazy breakout and then it drops back down to where the bears got trapped, where the previous resistance was, then yeah, I would probably look to scalp calls, right? But based off of what I can say in this video, that's my plan, that's my interest, and these are very quick scalps. And then in terms of overall levels, I will say we are due for a drop to retest this wick. We're due for a drop to go to at least 427.70. 427.70 to 420.70. We are due for some sort of pullback within that range. And then in terms of calls, based off the videos that I make, I've been personally waiting for $424. $424 is a great level to consider scalping a call. Very, very quick in and out. As you can see right here, the lowest $424. This is where the massive bear trap was created at 424, also from the gap at 421.82. Those are my two levels for calls, right? I could have tried calls towards the bottom of this support channel, but I didn't want to. I wanted the lower level based off the video, and I'm completely fine with that. I have to be very careful in terms of the levels that I'm giving out within these videos. And you guys need to understand, in terms of Trader Society and how I trade in real time, it's far more than the video lessons. So now that I explained my interest and why I'm interested in calls at the lower levels and then puts at the higher levels, let's get into the day. So in terms of the day, it wasn't a massive green day for me. However, the commentary and analysis was spot on, and I did a very good job of swaying people away from buying puts. If they followed the analysis and they followed the commentary, nobody got trapped in puts. I was against puts for the vast majority of the day. I did have 2 scalps on puts that were small losers, but my wins on calls made up for all of that. With that being said, and when I'm saying small loser, I'm talking SPY goes 10 cents against me within the price and I get stopped out. That's how quick. But anyways, in terms of my watch list, this was a fairly good watch list. As you can see right here, I posted this last night. The key levels for puts were at 428.30. That was our lowest level. We were looking for that to react as a resistance, the 428.30 to 428.50 zone. Unfortunately, it did not react as a resistance at the time we tried it, but I got stopped out extremely quickly. Like I said, only 10 cent move against me. And then 429.70 was the key gap close reversal level. And then we're looking at 431.72 as well. So in terms of the morning analysis, what I said is we could see one last spike to 428.30 before testing the 424 level, which is where we wanted calls. The reason why I said that was, this is at the bottom of the support channel. I'm not going to try to hope and predict that a support level is going to crack. Basically, the only way I would play puts at 426 is if 426 cracked, it had a massive drop, say a 2-point drop very, very quickly, and then it spiked back up to 426. Then I would hit puts on the retest with expectations of it reacting as a lower high. Instead of predicting something, I would react, wait and see, and then take advantage of who got trapped. If it goes under 426 and the bulls got trapped, then I can do puts when it rips back up to the level that they got trapped at. So that's the game, man. The game is not trying to predict when support is going to get cracked. That is how you get trapped, hoping. You could be right, but for the vast majority of the time, you're going to be wrong because, as you can see, the win rate is clearly on the bulls' favor towards the lower end of the support channel, and it's a terrible risk-to-reward ratio in the first place. Wait for support to crack, wait for the bulls to get trapped, and then when it rips back up, then you play puts. That's how I play key breakdowns if I were to play them. So with that being said, this is why I say, I'm mainly just watching 426. It's too low for puts and too high for calls. The reason why it was too high for calls is obviously on the day, it was like the best entry on the day for calls, which it could have been. It could have also been the best entry for puts on the day. But speaking off the daily chart and the levels that I provide in the videos, my best level for calls in terms of updated was at 424 to 422. Right? So I'm not interested in calls towards the lower end of this channel. Now, if you were to scalp it with a tight stop, then you can go for that. But it's just common sense, man. Why would you want to buy puts at the low end of a support channel and risk getting trapped, especially when SPY is gapping down? We talk about this all the time. When SPY gaps down, when it opens up lower than it previously closes, which is basically what it did. It kind of just had this little move down into the open. It didn't really do too much. You're going to want to avoid put options for the most part in that situation, especially when you are at that key low end of the channel with this very overall bullish trend throughout the past 2 to 3 weeks. This is heavy support at 426 and it's been ripping back to the 429 level. I'm not trying to be that guy who hopes and predicts that a support level is going to crack, which is why I said I'm just watching this level because it's too high for calls and it's not worth the risk with puts. It's too low of a level. You need to focus on the higher levels, especially when SPY is going super bullish. The only way we're doing puts at a key support level is if it has a massive crash and then rips back up to the level where the bulls got trapped and we short the retest for the lower high expectation. So that's what you need to understand about the style of trading. And then that was overall it, man. So from there, let me walk you through some of the trades that were made today because I had phenomenal trade ideas on calls today, and this is where I really led in terms of direction. So I had a fairly good idea in terms of dip buying 428.30. That worked out twice. We actually ended up having analysis in dip buying, the level where we were interested in doing puts. I tried puts at 428.30. I got stopped out. It had a massive breakout above 428.30. As you can see, it rocketed to 429.20, a nice quick breakout. So if it's going to drop back down just as fast as it went up, the most likable outcome is it bounces at that previous resistance level since the trend was bullish. So if SPY breaks above this resistance right here, and then it has a nice breakout, and then it drops right back down to the previous resistance, you're going to want to dip buy calls at that level. It should have an instant bounce. Now, some tips and tricks that you can use with that is you want to confirm and identify that the trend is bullish. The easiest way to do that is to wait later on throughout the day, along with using the daily chart. And you also would want a big overreaction. The bigger this were to break out, and then the quicker it were to drop, if it dropped as fast as it broke out, that's great. So this would be an even better breakout opportunity if it had a massive breakout, because then it would be more oversold if it dropped just as fast as it came down, right? But that's the idea I came up with, right? So basically, when SPY was in the 429s, I told people best price to buy the dip is at 428.30. It worked here and it worked here. There was 2 scalping opportunities where this spiked to 428.80, and then from there I told them I will be looking to buy calls at 427.70. And that was the exact low. And this is where I nailed it, man. So many people were bearish when this was dropping. And I told them, I'm looking to buy calls at 427.70. I took a starter at 429.90. And then I added when everyone was bearish. They were all saying rest in peace. We had a lot of people follow that trade as well, and they did extremely well. The reason why I said that level is SPY's overall trend was bullish on the day. And there was very strong bottom wick support right here at 427.70. So if this is going to quickly spike to $429.20 and then drop back down to the bottom of this wick where the bears got absolutely trapped on an overall bullish day, you better believe I'm looking to buy calls at that level. And if I were to get stopped out, I would look to re-enter towards $427, right around that level. I would probably re-enter at 427, or maybe even have higher expectations and re-enter at the bottom of this wick at $426. That's what I would have done, and I likely would have made my money back if I did get stopped out. But basically, based off the trend and the patterns I'd identified, if it's going to crack through 428.30 and that bounce worked out 2 times, we're not going to play it more than that. It's most likely going to bounce right here where the bears got trapped. Look at this candle, man. This is a very, very quick bear trap at this 427.70 level. As soon as it hit, it exploded up, and then SPY had a breakout. And it bounced twice off the previous resistance at 428.30. It bounced here, it bounced here. That's a very, very good sign for the bulls, and they're trying their best to continue the uptrend. So if it's just going to drop very, very quickly straight back to that level, and then, man, what a great confirmation here. Look at the confirmation, man. As soon as it tested the level, history repeated itself. Look at the 5-minute chart. You see the hammer, and then look at this. You see the pin, you see the hammer forming. What a great confirmation to get in on calls and then ride this back up a little bit, right? So that's why I alerted calls literally at the lows, and then before I called out 428.30, and that were my overall plays, man. And then from there, I told people, man, just avoid puts. Stay away from puts. It's not a put day. The overall trend has been bullish on the day, right? Puts haven't been printing. If you study the intraday chart, this is what you have to understand. If SPY is just slowly grinding up and creating all these bear traps, look at where the smart money is. The smart money is from all the people who are buying the dips. And in terms of the best dips to buy, it's when SPY has a nice breakout and then it drops back down to the previous resistance level where the bears got trapped, where the breakout was triggered. That's when you're going to want to look to buy the breakout. Other words, you might be at risk of it being a fake out. But if the trend's bullish and it's slowly grinding up and you see all these bottom wicks, all these dips are banking, if SPY's going to have a big overreaction to the upside, and then it's just going to drop right back down to the previous level where it had that overreaction, you're going to want to look to get in calls, man. And that's how I like to play bullish days. My type of style on playing a bullish day is you give it some time to see if the trend's actually bullish, to see if the dips are actually printing, to see if it's just slowly grinding up. And in a sense, in terms of every time it dips, it just bounces. And all it's really doing is just slowly decaying put options to get destroyed throughout the end of the day, right? Once you begin to see that and see who's really making money, the best advice I can really give you is wait for SPY to have an overreaction to the upside or to the downside, right? So if it has a big breakout to the upside, then wait for it to drop back down to where it previously had that breakout, to where that previous bear trap was created. If it has a big overreaction to the downside, then look for the best support levels where the bottom wicks are, right? So in terms of a realistic bottom wick with a nice little drop, for me, it was at that 427.70 level. This is a very quick pump right here from 427.70, and then it's a very big dump. So it makes sense to try to buy calls here, especially with it being a bullish day. And if the day were to flip bearish, it would be very, very likely to see just a small bounce at 427.70, where you scalp those calls for a quick profit. So those are the tips. Those are the tricks I can give you in terms of trading the SPY. And here's the deal, man. If you want to be a part of Traders Society, it is the first link down below within the description. It's a one-time fee. It's a lifetime access. So you get access to the networking opportunities, to the Discord server, to the community, to the moderators, to the video lesson library, where it's going to teach you everything it is that I know about the market. It'll teach you how to read price action, how to trade price action, how to master that, how to master SPY as well, along with stocks. If you want to learn how to trade like a sniper and how to scalp, this is going to be the right program for you. You also get access to the video lesson training, which includes all of the trading strategies, risk management, position sizing, psychology, mindset training, along with the live trading streams, the live voice channels, all of my real-time trade alerts, all of my real-time trade ideas, all my real-time trading watch list, all of my questions and answers. Everything is in there, man. If you want to join the program, now is the best time. It's at the lowest price it's possibly going to ever be at. And this is the best time to join, man. You get access to the watch list, the trade ideas, the trade alerts, the live streams. You get access to, this is the best trading floor, this SPY floor, man. Every single day, you're going to see the moderators. So in terms of the moderators, man, they are all listed in the start here section. These are the best traders within Traders Society. You'll get to know them within the program. They're absolute beast. And you will see them every single day just printing money, man. Printing money, taking money out of the market from the SPY. There's millions of dollars being transacted throughout this SPY floor collectively as a whole every single day. And the traders here are absolutely crushing it, especially the well-experienced ones. If you want to surround yourself with the right network, I would strongly encourage you to. Roy recently joined. He's up $1,000 today. He recently made, I believe this was the same guy who ended up making $11,000 yesterday. Here he is today, up $1,000. Very, very consistent, man. And if you want to get involved with the program, I would strongly recommend you do. This is the best time possible to join. Fridays are known for being my best trading days, and you will get access to everything within Trader Society. As you can see, the polls speak for themselves in terms of the results collectively as a team with the win rate. This is very, very good results. It fluctuates from 80 to 90% success rate. With that being said, I'm going to leave it off at that. It is the first link down below in the description if you want to join. And I will see you guys tomorrow live at Market Open.